And we are live. We are live, folks. Good morning. Good morning, money mavens, wealth warriors, and financial freedom fighters. Welcome to the Impact Money Show, broadcasting live from soggy Washington, D.C., where it's 59 degrees Fahrenheit and raining like the sky's trying to drown out its tears. Grab your umbrellas and your coffee, because we got a jam-packed show today, diving into everything from crashing currencies to geopolitical chaos with a side of AI breakthroughs and a sprinkle of conspiracy theories gone wild. Let's get this party started, folks. Let's get this party started. I'll tell you what, it is really something else here in the district. You just can't even keep up with anything, whether it's Trump wanting to get rid of Thomas Massie. Thomas Massie, the only person who is trying to shrink government, and then this big, beautiful spending bill, supposed to be big, beautiful spending bill, and it's like raising taxes on us, basically. I mean, there are tax cuts, and there's, like I said, hey, listen, I appreciate the tax cuts, Mr. President, but if we are spending more money, then that is not a tax cut, folks. I mean, yeah, we're going to get a tax cut, but then we're going to spend more money. Inflation's going to go up. Inflation is a tax as well. Washington, D.C., the weather and the local vibes. It's a dreary day out here in the nation's capital, 59 degrees with the rain pelting down. It's kind of the weather that makes you want to stay in bed and binge watch financial documentaries. The Big Short, anyone? The Potomac's looking extra moody, and the cherry blossoms are probably wondering why they bothered blooming. Local news, well, the D.C. Metro is still a mess. Delays on the red line because, surprise, wet tracks don't play nice with trains. Meanwhile, the new Food Trucks Festival hitting DuPont Circle this weekend. So if you're brave enough to dodge the raindrops, you can snag some gourmet tacos while plotting your next investment. And in classic DC fashion, the Capitol Hill is buzzing with whispers of budget battles and policy showdowns. But we'll get to the political circus in a minute. Markets. The dollar is down, crypto's up, and oil is feeling feisty. Let's kick off with the markets because the numbers are dancing like nobody's watching. The US dollar is taking an absolute nosedive over the last week or so, with the DXY at 99.7. Down below 100 again. Down 0.42%. Ouch. The greenback's feeling more like the slightly less greenback. Sliding against the Japanese yen to 144.12, down 0.26%. The Bank of Japan's hinting at a rate hike if inflation keeps simmering. And the carry trade's unwinding faster than a bad sitcom. Meanwhile, U.S. stock futures are in the red. Dow futures at 42,494, down 0.65%. The S&P 500 futures at 59.24, off 0.6%, and NASDAQ futures at 21,312, down 0.63%. It looks like Wall Street's got the pre-market jitters. Maybe they're spooked by all this rain. Over in Asia, let me just toggle my screen here a little bit. Over in Asia, things are perkier. The Hong Kong Stock Exchange is up 0.62% at 23,827, proving that a little Eastern optimism can brighten even a gloomy global outlook. Oil's getting frisky with WTI crude at 63.08, up 1.69%. Guess those OPEC rumors are fueling the fires. Precious metals are shining too. Gold's at 3309.90, up 0.77%, and silver's at 33.37, up 50.58%. If you're stacking bars, you're probably smiling right now. And then there's crypto. Oh, crypto, you wild beast. Bitcoin at 106,378. Of course, it's been bouncing around here. Actually, at 106,150 or so at the absolute moment. Up about 1% after teasing all-time highs overnight. Is this a double top? Or are we mooning to Mars? Speculators are split, but I've been shorting the peaks this week and pocketing some nice gains. Risky? Sure. But a nasty crack has got to be lurking, right? Ethereum's down a smudge at 25.25, off 0.15%, and XRP's in the same boat at 2.34 down 0.16. Solana's bucking the trend at 167.97, up about 0.25%. And Litecoin's got some pep at 95, up 1.79%. Crypto's a roller coaster, folks. Buckle up or get left behind. I'll tell you what, that Litecoin should be $1,000. I don't know why Litecoin's not $1,000 yet. I just might go on a buying spree. Hello, Susan. Good morning to you. Trump, the Don's back and he's stirring the pot. Now let's talk about the man who never leaves the headlines, the president, Donald J. Trump, fresh off a 2-hour phone call with Vladimir Putin, President Vladimir Putin. Trump's pushing hard for Ukraine ceasefire, saying talks will start immediately. But here's the kicker. He's hinted Putin might not be ready to play hardball. And if peace talks stall, Trump's ready to pass on the whole thing. The MAGA base is restless, though, especially after FBI picks, Kash Patel and Dan Bongino dropped a bombshell. We'll get to that later. Spoiler, it's about Epstein, and it's got the whole movement in a tizzy. Trump's also headed to the Gulf, cozying up with Saudi Arabia, Qatar, and the UAE, which has Israel nervous about where they stand in his priorities. Oh, and did we mention the May Day protests? Anti-Trump rallies are popping up nationwide with signs like Elon Musk's golden retriever. Oof. That's got to sting. Elon Musk from Doge to Dodge. Speaking of Elon, Tesla's Titan is making waves, and not all of them are good after stepping back from his role as the head of the Department of Government Efficiency. Doge, yes, like the meme coin. Musk's down to 1 or 2 days a week in DC, focusing on Tesla. It's a rocky road. His Doge stint was, let's call it memorial. There was an infamous inauguration rally where he threw up what looked like a Nazi-style salute, sparking outrage and a letter from all these other people. Yikes. I don't know. Elon maybe be sick to tweeting. And then there's the Pentagon briefing fiasco where Trump nixed a top secret China talk for Musk, shouting, "What the F is Elon doing there?" Classic Trump-Musk bromance drama. On the plus side, Jim Cramer's endorsing Tesla stocks after a cozy Musk interview. Oh boy. Well, that's the kiss of death right there. Of course, everyone's screaming the Cramer curse. If Tesla tanks, don't blame me. I'm just a messenger. I mean, this guy Cramer, he calls everything wrong. Like, this is the last guy in the world that you want to say your stock is going up. I mean, I don't know how anybody could get more calls wrong if they try. I think he just gets paid and he doesn't care. So guys are in trouble. They know they can go pay Jim Cramer to say whatever they want. I mean, I don't know this, and Jim, sorry, man, I don't know you really either. But that's just what it looks. That's what it looks like to me. AI, the future's here and it's chatty. AI is moving faster than the Bitcoin bull run. This week, xAI's Grok 3 got a shout out for its think mode and DeepSeek mode, letting it ponder like a philosopher or scour the web like a caffeinated librarian. Available on Grok.com, X, and mobile apps. It's free with usage limits, but Super Grok subscribers get more juice. Meanwhile, tragedy struck India's AI scene. Nikhil Samwashni, a 25-year-old engineer at Ula's Kutram, took his own life, allegedly, due to toxic work environment. A Reddit post called out a verbal abuse and corporate silence, sparking a debate about the tech's mental health issues crisis. On the lighter note, AI's new editing video sound with tools like Google's Audio Magic Eraser is really heating up. Pretty soon, AI will be directing our lives like Spielberg's guidelines. But bots are taking over nicely for now. Robotics heating up too. Boston Dynamics Spot Robot just got a software upgrade, making it better at navigating construction sites and sniffing out hazards. Meanwhile, Tesla's Optimus bot is inching closer to production, with Musk promising it'll handle your chores by 2027. I got to get me one of these bots. I'm telling you guys, I want one of these bots. I know it's scary. Oh, no, I don't want one of those bots in my house. I want one of those bots in my house. I want one. I'm going to get one. In Japan, SoftBank's humanoid Pepper is now a museum tour guide, charming visitors with its quirky banner. The robotics market is expected to hit $200 billion by 2030. So if you're not investing in bots, you might be missing the next big thing. In life longevity, people are pushing the envelope. Can we live forever? Life longevity news has given us hope that we'll outlive our 401ks. Researchers at Stanford just published a study on NMN showing it boosts cellular repair in mice. With human trials looking promising, caloric restrictions still the gold standard for slowing aging. But who wants to starve? Biotech startups like Calico, backed by Google, is pouring billions into Alzheimer's and cancer therapies, aiming to extend health spans. And in Silicon Valley, biohackers are obsessing over rapamycin, a drug that might delay aging. But side effects include immune suppression. Live long, but maybe don't hug strangers. The longevity market's booming, so keep an eye on it and those biotechs ETFs. The Ukraine war, Trump's peace push hits the snag. Over in Ukraine, the war is still a heartbreaking mess. Trump's been vocal about brokering a ceasefire, but after a deadly Russian bombing raid in Kiev, 70 missiles, 150 drones, and at least a dozen dead, peace feels elusive. Ukraine and Russia just held their first direct talks in 3 years, agreeing to a prisoner swap and floating ceasefire versions. But details are murky. Trump's envoy, Steve Witkoff, stirred controversy by suggesting Russia keep 4 Ukrainian regions, which has Republicans and allies like Ukrainian Zelensky fuming. Ukraine's chief rabbi even dropped a music video begging Trump to fight in the name of light, complete with a guitar solo and war footage. Heavy stuff. But it's got 10 million views, so maybe rock and roll can save the day. In Israel and Palestine, we got a humanitarian crisis. The Israel-Palestine conflict is a gut punch. Reports say Israel's expanding in Gaza's operations, aiming to control the entire territory, while aid workers warn of famine due to blockade. The term genocide is being thrown around, with activists citing civilian deaths over 40,000 people. Israeli insists it's targeting Hamas, but there sure are a lot of dead babies and women. Trump's team bypassed Israel in talks with Hamas, focusing on hostage releases, which has Jerusalem feeling sidelined. The UN's called for urgent humanitarian access, but with missiles flying, tensions are sky high. And this isn't just a regional issue, it's a global powder keg that may spill over into Iran, which could start World War III. Now, those rumored Israeli nuclear strikes on Iran, yep, that's what everyone's talking about here in D.C. The ones that could spark World War III are still just that, rumors so far, no hard evidence, but people are ablaze with speculation. Trump's team is reportedly talking to Iran about its nuclear program, which has Israel tricky, especially since the U.S. dropped demands for Saudi-Israel normalization. Iran's proxies like the Houthis are stirring the pot. And Trump's sudden halt on U.S. strikes against them has helped. Could this escalate? Sure. Will it? Nobody knows. But the doomsday preppers are stocking their bunkers just in case. Kash Patel and Don Bongino. What happened to these guys? Anybody? What in the world? And now the plot twist that nobody saw coming. Well, I saw it coming. Kash Patel and Dan Bongino, the MAGA darlings running the FBI, are suddenly sounding like deep state shills. On Fox News, they insisted that Jeffrey Epstein killed himself. No foul play. Case closed. The MAGA base lost it. People screaming, "Who bought you?" These are the guys who built their careers on Fed-surrection theories and deep state exposés. And now they're saying there's no there on the Trump assassination attempts in Pennsylvania, too. What's next? Lee Harvey Oswald was the lone gunman? Are we living in a simulation of what happens to these guys? I mean, I've always said for all these years, people come to Washington, D.C. with the best of intentions. They do one line of blow, take one bribe, sleep with one blonde girl, and they're cooked. Now, I don't know if that's how they do it or not, but something's up. I'll tell you that. Look, I get it. Patel and Bongino were the Xena and Hercules of the conspiracy world, slaying swamp creatures left and right. But put them in the FBI's corner office, and suddenly they're reading from the same script as the suits they used to roast. Patel's even promising a wave of transparency on the Trump-Russia probe, but it sounds like damage control. What happens to good men when they get those FBI badges? Do they drink the Kool-Aid? Get the secret handshake? Or is it just the system so big, even the baddest badasses get chewed up? Either way, the MAGA faithful are fuming. And Maria Bartholomew is probably booking them for another grilling. Well, that's the morning wrap. The world that we're living in, rainy, chaotic, full of surprises. The dollar's wobbling, stocks are shaky, crypto's doing its usual trapeze act. Trump's juggling the wars and the protests. Musk dodging PR disasters, and AI's either saving us or stressing us out. Ukraine's fighting for survival. Palestine's in crisis. And Iran's got everyone on edge. As for Patel and Bongino, well, maybe they're just playing 4D chess. Or maybe the swamp's got quicksand. Stay sharp. Keep your portfolio nimble. Don't let the rain dampen your hustle. This is the Impact Money Show. And up next, we have the great Matt Dixon with the Market Watch Report. Sir Matt, how are you?
Hey, morning, Bruce. Very well, thank you. Morning, everybody. Some wise words there from you, Bruce. Keep nimble.
Yes.
Nobody knows what the market holds for us.
That's one of the things I say quite often now, that you say all the time, and that is no one can predict what the market's going to do. You can come to some type of, okay, I think it's going to do this, but nobody knows.
Well, I was looking on YouTube last night, just looking at the different sides of the argument, and they're really convincing arguments for both ways, that the market's going down, that the market's going up. There's absolute experts on both sides of the fence. And so it just, cements it that it's all about assessing what are the possibilities out there, and then what are the probabilities of those outcomes, and then just structure your risk reward accordingly. So I can't tell you where the market's going for sure, but I can tell you what the probabilities are and what the likelihoods are, and then we can make money if we take all that into account. But I can't predict. I'm not a fortune teller. Nobody can can really tell the future. So I was looking, just while I present my screen, if I can, I was looking at iRobot. Just, you're talking about AI and everything.
Yeah.
So iRobot was set in the year 2035. So we're not that far away.
No.
Quite interesting because, it's, I really don't think we're that far away. But anyway,
we're not that far away. And like I said, I can't wait to get my robot. I'm going to be one of the first ones lined up. I didn't get a Tesla when it came off the thing, but I want a robot.
Yeah, well, I don't blame you. Could doing some of those mundane jobs. Yep. Anyway, can you see my screen, Bruce?
Ending diagonal pattern.
So here's a little lesson on a little bit of Elliott wave here. So normally markets move in 5 waves are impulsive in the direction of the trend, and you get 3 waves which are corrective against the trend. So the ending diagonal is one of those unusual ones, because normally with 5 waves, the rules are that wave 4 cannot overlap into territory of wave 1. So we see with this ending diagonal here, you can see we've got a wave 1 up, and we've got 2 down, 3 up, and then 4 down. You can see that the 4 comes down into territory of this wave 1 here. Now, it's one of those unusual anomalies, really, whereby you can have overlap in what's called a leading diagonal or an ending diagonal. Now, the reason I'm showing this one is you can see the characteristics of an ending diagonal here, that basically the last wave here, ending diagonal, means it's the last wave in the pattern, really. It's the end of the cycle. So it occurs in either a fifth wave or a C wave. So you can see at the top right here, it's a 5 or C. That's where you will potentially find an ending diagonal, but they're very specific really with the characteristics. So within this ending diagonal, each wave is made up of A, B, C. So it's telling you that there isn't really, although we're in the end of an impulsive cycle, it's a wave 5 or a wave C here, that there isn't any real strong conviction. And that's why it's moving in cycles of 3 waves within it. So it's a kind of combination mixture of a corrective pattern and an impulsive pattern. And it just shows you there's not real conviction. And I think that goes very well with what you were saying, Bruce, about there's so much uncertainty in the markets right now. We don't quite know, whether we're going to rally through to brand new all-time highs for Bitcoin, because we have on the two sides of the story, there's some amazing news with all the Michael Saylor buying in and more adoption and more ETF buying, etc., etc. Then on the other side, you've got Trump tariffs and you've got economic woes. UK, we just had inflation come out 3.5%, so that's worrisome, yet growth is still lackluster. We've got tariff inflation yet to come through probably in America. We've mentioned that a few times, that whilst we've had these tariffs in place, that the actual inflationary effect hasn't fed through to prices yet, but it's probably just about to come through. So if it does come through with an upward shock to inflation, then that might change the outlook for interest rates. And we'll probably touch on interest rates, what the expectations are in a moment. But anyway, within an ending diagonal, you also tend to work within trend lines. The final wave here tends to operate within trend lines. So you can see here that the trend line above and below, that this actual diagonal wave pattern is within that trend line. So let me just flip over to what the reason I've got this is we have a potential ending diagonal formed here with Bitcoin. So you can see it follows all of the rules we just mentioned, that basically the wave 4 has dipped into the territory of wave 1, but it does operate within these trend lines beautifully. I mean, that is absolutely perfect, isn't it? So I'm just wondering, because we've been talking about potential double top, and you mentioned it again in your intro, Bruce,
Yep.
about have we had a double top? Well, we're very close to it. We've got 108,000 plus, over 108,000. The top here was 109,000. That is close enough to be called a double top in my book.
Mine too.
So potentially we could have, if this is an ending diagonal, we could the next move could be to downside. And apparently so far it's moving that way.
Yes.
We'll go on to live chart in a minute, but I did only post this chart this morning on my X feed. So again, we have a beautiful 1, 2, 3, 4, 5, but within the trend lines, etc. And then just to confirm it all, the icing on the cake is we have some amazing bearish divergence here. You can see we get continually higher highs on the price, but it's not supported by volume. So the volume, or the RSI here, is lower, lower, lower. So basically higher peaks on the price and lower peaks on RSI. That is basically telling you there's bearish divergence. And in this case, it's regular bearish divergence, which warns of a reversal in price, which is precisely what we are beginning to see at the moment. So there are still quite a few possibilities. And as we said, markets there's no certainty, made up of possibilities and probabilities. But right now, this working out so beautifully within the trend lines, and even within it, by the way, you've got ABC for the 1, you've got an ABC2, ABC3, and ABC4, and then not quite so clear there, you'd have to open it out. But here again, ABC5, that's quite clear. So it just fits the bill perfectly to be a potential ending diagonal. If that's the case, we would expect some movement down, probably some reasonably substantial movement down. It might not be the end of the whole movement up. So we'll just go back to the real live chart. So I'll just start, first of all, just begin recapping on the whole move really on Bitcoin from pretty much from the beginning. I mean, obviously it goes back to 2009 when Bitcoin came into existence. And moving on from there, so from the price of virtually zero, we got what is apparently a wave 1 higher. There was divergence here, so again you can see higher highs on price, lower highs on RSI. That told you there's going to be a pullback. So that wave 1 peak was 19,000 and something, and we got a very serious dip there to 3,000. So from 19 down to 3, that's a massive fall. But it was signaled beautifully with the regular bearish divergence here that we have. And there's lots of other divergences. I won't go into them all, but that's just one great example. So we've got potentially a wave 1 up, 2 down, 3 up, which took us to, I think, about 65,000. Then we got a serious pullback in wave 4, then another 5-wave push up here in wave 5 to give us that old all-time high that we had that held for a long time of 69,000. And that's a very, very important level there. So we have either, it's a 1, 2, 3, 4, 5. So it's either an A wave or potentially it's just a wave 1. So it can be either. Again, we look at the possibilities and probabilities. It can be wave A or wave 1. Then we've got an ABC down for the B wave or wave 2. Doesn't matter which. That was to the FTX crisis low of around 15,500 for Bitcoin. And then again, there was some beautiful divergence in place. I'm just trying to look for some examples of where it is. So we got basically higher lows in price and we got lower lows in corresponding RSI. So that told us that we were about to move higher in price. So even when you had all that nasty news coming out, the FTX crisis and the, you know, the terrible low in the Bitcoin and some other assets, particularly Solana, of course, all that terrible news, but we had a signal, we had some bullish divergence, and it was actually hidden bullish divergence that we had. That was telling you that price was actually going to start to move again to the upside, which is precisely what it did. So we can use these signals very much to our advantage. And then, of course, from the FTX low, we had that 1, 2, 3, 4, 5. And the big question is, are we complete? And we need to open it out a bit to have some idea as to whether we're complete. This is the weekly chart we're looking at. So each of these candles is 1 week in duration. So it's a long-term chart. So we need to look at shorter term to try to focus in on the final move higher. So I'll go to the daily first of all. So on the daily chart here, and again, I'll just open that out a little bit. We can start now to see a little bit more of the detail on this final move up. So we had a wave 3, then a wave 4, typical wave 4, really choppy, overlapping, everything's overlapping there, typical wave 4. And that's in contrast to this wave 5 high in red, which is a clear 1, 2, then it's long wave 3, extended wave 3. And interestingly, I measured wave 1 here. I transpose it to wave 2 here, to the bottom wave 2, and wave 3 I've got labeled was exactly 4.236 times wave 2. That's a beautiful extension. Really satisfying when you see that you're probably on the right track. And it's certainly a good extended wave 3 impulsive move. So 1, 2, 3, we've got a very good pullback here in 3 waves for wave 4. And then we're pushing up, we pushed up in wave 5. And that's potentially the end of the move higher. That's a real possibility. So in the red, which is the larger scale, we've potentially completed a wave 5 here. So we could now be getting quite a serious pullback. It could be impulsive down, but it looks actually most probably corrective. It could be an impulse down. If it's an impulse down, then we're starting a big move down, but it could just be an ABC. We could just be looking at a different fractal. So assuming it's ABC, we've had the A down, we've had the B up, and we'd expect C down. Now, if the C wave equals the A, which is often the case, I'll just measure where we can expect this to go to, because just remember, I told you 69 is a really important level that we don't want to break. So if we've had an A wave down, remember we just dropped to 108,000. So not dropped, we just rose to 108,000. So this gives us the potential retracement that we could potentially go down to. If this is an A and this is a B, then the C wave, the most likely termination point of the C wave will be 73,000. That's just below the low that we had only a couple of weeks ago, a few weeks ago, of 74,000. So that would be A, B, and C. Now that will be perfect. It will be nicely in alignment with what I really want for Bitcoin. I do not want to break that 69,000 level. That's this dotted red line here. If we break that, it's really bearish for Bitcoin long term. It's a horrible scenario. But if we don't break it, if just flipping back, it's the difference between whether we were just going back to the weekly, it's the difference between whether this is ABC or whether it's 1, 2, 3. So if we break that 69,000, then it's most likely that this isn't 1, 2, 3, because remember, wave 4 isn't allowed to dip into territory of wave 1. So that means it would not be 1, 2, 3. It would actually be ABC to the upside. So then we'd be moving impulsively down to, it would be horrendous. It would be catastrophic for Bitcoin. So we do not want to see this as ABC, as ABC. We want it as 1, 2, 3. And if it's 1, 2, 3, we do not want to break that 69,000. So just again, going back to the daily, that actually fits beautifully with, even if it's negative short term, we have A, B, C. The most likely target, as I say, for the C wave will be 73,000. That keeps us nicely above that 69,000 line in the sand. So that would be a correction, ABC correction. That would then mean that following that, we can rise to new all-time highs. Perfectly okay, we can do that. It fits with all the rules and everything. And we get a nice push to new all-time highs again for Bitcoin. And that's my preferred scenario at the moment. I'm really hopeful that's the way it's going to be. But we just have to keep in mind the possibilities. Now, just going to the 4 hour finally. The reason I'm doing 4 hour is to show you another reason why I think we could be due a bit of a pullback. Because as we said, when we looked on my X feed chart there, we showed the potential ending diagonal. So I've gone to the 4 hour chart now, which is much shorter term, but we can see that ending diagonal here on the live chart with the potential move down from it. But again, we've got this bearish divergence, regular bearish divergence, telling us of a potential turn down. So this could be the beginning. We could have effectively double topped, and we could be seeing the beginning of the move down in a C wave. And a C wave would be quite, would potentially, well, it would be quite aggressive. The C wave would be in 5 waves. And, you know, you'd expect the wave 3 to be an extended wave, etc. So probably quite a bit of downside to come. As I say, ideal target would be 73,000. And that's a real possibility. So you've got to keep that in mind. Even if you're bullish and you think the market's going up, you know, only take positions that you can hold if you can hold reasonably, you can afford the loss effectively. If it does dip to 73, for example, because that is a genuine possibility. And if you want to put odds on it, there's probably a 50% chance of that happening. So that's a large possibility that we're going to get quite a serious pullback on Bitcoin. And it could be for any number of reasons. It could be economic reasons. It could be
a war with Iran.
It could well be a war with Iran, because Israel seem to be saying now they're going to take it into their own hands. Even if they don't have Trump backing, they're going to do it. I think Israel are genuinely concerned about Iran getting nuclear weapons. And I personally think rightly so, because Iran have said their sole desire is to destroy Israel, to wipe them off the face of the earth. So you wouldn't want someone like that to have nuclear weapons on your doorstep. And I know there's arguments this way and that way, but you know, that's just the way it is. Anyway, moving on. I don't want to get too much bogged down into those political things, because we, you know, again, two sides to the story. People will never agree. So we just need to look at the evidence and follow it as it goes. Just touching on Ethereum here, again, we've potentially had, it's not a long-term double top. Remember, Bitcoin, we're looking at all-time high double top, which was 109,000, the all-time high. Ethereum is only, well, it's just a little over 50% of its all-time high. So it's nowhere near an actual double top. The only potential double top is a very local double top, just for recent local highs that we had around the 2,800 level for Ethereum. Bearing in mind it went up to about 4,800, didn't it? So it's still a long way off. And we've always been more negative about Ethereum, even though there's some positives there. It has its ETF, etc., which is actually what caused this. Well, the ETF gave us some positivity. What really caused the recent pump was actually this Petra upgrade, which reduced gas fees and everything.
So, I also think it was very coordinated by these financial institutions. They were off. It was the most shorted asset from financial institutions this whole time it was crashing, and so I think they flipped.
But yeah, that's one of the most powerful indicators there are. Is basically when you see a massive amount of shorting for a particular asset, and we actually saw the very same. If you look at United Health, I mean, there's a lot of negativity about United Health, and then everybody was shorting United Health, and then we got quite a decent bounce on it. So from 250, we're now at 320. So what's that? That's close to 30%, isn't it? Almost 30% from the low.
That's a nice bounce.
A nice bounce, and that's really, again, I'm always talking about Warren Buffett and his when there's blood in the streets, it's time to buy. And that's the same when there's massive shorting, when there's real negativity around surrounding something in particular, then probably that's the time to buy. And that was the case here. I'm still not convinced long term, but definitely that was an interesting one now. And you can look for the amount of shorts in the market. So that's what's called a contrarian indicator. And basically when everybody's short, it's probably time to go long. And so it's contrarian. It's the opposite of what you'd kind of think. You'd think, oh, if everyone's short, that's really bad for the stock. But actually, people need to get it in mind that when everybody's short, everybody is short. The only way to go is probably up, because some people will start to buy, and then it's a virtuous spiral. Then self-confirming, when someone buys, someone else buys, and saying both sides of the story. And we've looked at the fear and greed indicator before. And I actually love looking at fear and greed because it does give solid indications when the market is massively in the greed situation. We'll look at that perhaps on the next show, maybe next week sometime. When the market's overly greedy, then that's time for pullback. And when it's overly negative or fearful, time for market to buy probably. So looking at Solana, I just want to jump into Solana. We've potentially, again, looking at a pullback. I don't know really at what level, because we've had a long pullback from the all-time high that we had at 295 on Ethereum. It's been a long downward journey that we've had, and it appears corrective. I mean, even this move down here was overlapped by this movement up here. We can see that, and though it doesn't look much, that was it peaked at 179, and the dip on that move down was 175. So it's actually a valid overlap. That told me that this move down is corrective in nature. It's almost definitely corrective in nature. That tells me that at some point we should see a new all-time high for Solana. So I'm not overly negative. I'm just looking at the shorter term, but all I need to do is open it out. We're on the 4-hour here, but if I just open it out, we can see that we do have a 5-wave move here. And again, we got a really nice 4.236. I'll open it out even more so we can see that. Yet another beautiful Fibonacci relationship for the extended wave 3 here on Solana, where we got wave 1 up, 2 down, and then a 1, 2. But I measured wave 1, transposed to wave 2. 4.236, which is the perfect Fibonacci relationship, gave us the precise end of wave 3. Then we got some sort of expanded flat here for wave 4, which is 3 waves, A, B, C for wave 4. And then you can see this all in one direction, nice impulse for wave 5. So that was a completed cycle, 1, 2, 3, 4, 5. You then expect there to be a pullback. And whether that pullback's complete or not, I don't know. But because we had 5 waves there, at some point, I do expect there to be some new highs to come on Solana. And I think we'll probably at least challenge the previous all-time high at some point. But again, just flipping back briefly to Bitcoin, I think we're due a pullback before that happens. Maybe a nasty pullback. If we pull back to 73,000 from here, that's quite painful.
Yeah.
And it could be, you see, even if Israel were to attack Iran, I don't believe it will be some massive all-out war. They will be targeting the nuclear bunkers, etc. It would be probably quite negative. I suspect oil prices would spike and stock markets and crypto and risk assets would fall. But I don't think it will be a World War III situation. I think it would just be a very uncomfortable geopolitical situation. And I think following that is actually probably the time where we'll see the major peace initiatives. So I do think Trump is trying for peace here, there, and everywhere, really. But I just don't think the world is quite ready for it, particularly the Middle East. Well, even Russia, Ukraine, to be fair. The world's not quite ready. And I know Trump is trying, and that's what he wants to be remembered for, I think. But I think his time will come. But it may follow something like an Israel attack on Iran, which will kind of clear the air, clear the way for a major peace initiative across the Middle East. And I do think that there will be a Palestinian state, and I think there'll be a time of peace. How long that will last, who knows? Middle East, peace never lasts that long. But for a time, I think we will see a time of peace. So we just mentioned oil, that potentially if there's an eruption in the Middle East, particularly with around the Persian Gulf, it's going to cause a massive rally in oil price. I think before that happens, so maybe it's not absolutely imminent, before that happens, we may have a bit further down to go on oil. It looks as though, well, it's definitely corrective here. From this low point here, we can see that the move down, all the moves are overlapping, so it's corrective. So I think probably we have one more low in oil. And I have said for a long time, I'm thinking we're going to go lower in oil. But I think following that, we're going to see a massive oil rally. And I think that could coincide, as I say, with trouble in the Middle East. So that may be a bit excessive. That was just, just a possibility. It may be excessive that we're going to go that low, maybe just a little bit lower. Let's just remove that. Maybe just a little bit lower for oil. I don't know how low. But I think this is, again, all corrective down. If you look at it, this movement up overlaps this movement down, this movement up overlaps this movement down. It is corrective to the downside for oil. So even though we're going to go for another low in oil, because this is ABC higher, we'll go for another low. Following that, especially if there's something goes on with Iran, then we're going to see a massive rally in the oil price, which won't be good for the world. In fact, this actually even confirms it, I think. We can clearly see from this high that we had, $130 high in oil price, the movement down is very, very, very corrective, really. We even got overlap here. Yeah, this movement up, overlap this movement down. It's corrective. So following it, at some point, we're going to rally, and we should rally above that $130. So that will be some serious trouble to come.
That's going to hurt.
That will hurt. I mean, if you get oil price that high, that is going to really pile of pressure on for inflation, isn't it?
Yes, yes. And these, this big, beautiful bill that they're trying to push through here in Washington. I mean, this thing is like a spending person's dream. It's like unbelievable how much more money they're spending, and it's crazy, man. It's just crazy.
Yeah. Just finally, I'll probably finish off here with interest rates, what expectations are. These things can change very, very rapidly, but I mean, I've not seen it this high. This is the highest I've seen. So the expectation now for June the 18th meeting, Fed meeting, FOMC meeting, 98% chance that interest rates will stay on hold. So we can see now there's basically no chance at the moment. There's zero chance, really. Well, I say zero, there's 2% chance, of course, of a cut. But it's 98% chance we're going to stay on hold. That's for the June. Let's look at the July meeting, what the expectations are there. Now, July, I've not seen it this high either. The July meeting is even that far out. We're looking at 73.7% chance of a hold yet again in interest rates. So we're not going to see rates cut anytime soon. And these things can all change if we see trouble in the Middle East and inflation rocketing higher, etc. But at the moment, there's going to be no change. And even if that happens, by the way, they're not going to be able to cut rates because if inflation's a problem. So this just shows that the expectations are shifting more and more to rates staying on hold and not being cut. We know Trump wants the rates cut. Fed Chair Powell doesn't. And Fed Chair Powell's winning that little argument at the moment. So that's June and July meeting, 30th of July meeting. And we're not going to get a cut. September is the first chance, like at the moment, with the markets telling us the first chance we could be seeing a cut. Let's just see. a 0.25% cut, 25 basis points. Potentially, the odds are on that we will get a cut in September. So we can see there 4 to 4.25 will be the rate. So the odds are in favor of a cut in September. So that's likely to be the first cut is September. Then October, we can see again the majority is rates would stay on hold from that September cut. So rates would stay on hold October. And potentially another cut in December. So we might possibly maybe see 2 cuts this year. That's at the moment, that's what the market's pricing in. So if you remember, Bruce, I know you said just a matter of a couple of weeks ago, the market was factoring in 3 cuts. It's now factoring in 2 cuts. And I think I've said, I don't even think they're going to cut this year personally, because inflation is going to be a problem.
Yeah. No doubt. There's just no doubt about it. I mean, well, there's like, anything can change, but I agree with you as far as there's no doubt about me agreeing. Inflation is sticky. It's still very high.
Yeah. And I'm always saying I'll finish, but I think gold's probably a good place to finish as well. I think gold is rallying nicely. This was a clear wave 3, ABC down wave 4. So the impulsive direction is still to the upside, and we can see I'll just open it out a bit more probably so we can really see that. We can see we're moving quite aggressively now to the upside. That tells us that there's actually a lot of risk in the air, that people are concerned about what's going on in the world with Iran, Israel, Russia, Ukraine, whatever, even the economy. Gold is a place where people go in times of uncertainty. It's a safe haven. So you can see these green candles moving up really nicely now, probably to a new all-time high. So if that's wave 3, this is wave 4. We should get a further 5-wave move. I think we've had a small 1, 2. We're going to get 3, 4, 5 to the upside to give us a new all-time high, I think, for gold in the not too distant future. So as we've said all along, gold should be part of any well-diversified portfolio. And I know Bruce was giving ways to get into gold for well over a year now, 18 months probably. You've been pushing gold. So anyone who had followed that advice has done extremely well.
They're very happy.
Yeah, I mean, if I let's just put the measuring stick on there, just see how much we've gone up from top to bottom. Okay, 38% in oh, that's only in 6 months, isn't it? 38%. That's not bad, is it? 38% in 6 months.
Great. Yeah, it's great. With something like gold, where it's not like crypto, where you're always in the back of your mind thinking, well, this could go to zero.
Yeah, I mean, it's good to have well-diversified portfolios hold all sorts of different kinds of assets, and those assets which could potentially go to zero quite easily. Crypto really could. You never know.
It could.
Even with quantum computing or something like that. That would be the final nail in the coffin for a lot of assets, potentially. So those things should form probably a smaller part of your portfolio. Things like gold, property are the more solid assets, the foundation to your portfolio maybe. Obviously, house is where you're going to live anyway. You need that. But things like that, commodities, gold, commodities we need to live day by day anyway. So commodities are a great part of any portfolio. So it needs to be well structured, well balanced. And a portfolio is not just about speculation. It's about balancing risk and reward, which we're always talking about balancing speculation with security. So anyway, I think that's about it for today. I'm going to be away for a few days, Bruce. So hope you have great shows for the next few days. I look forward to catching up with you sometime next week, if that's okay.
Sounds good, Matt. Well, we'll miss you, but I hope you're having a great time out there.
Yeah, loving it. Thank you. So thanks very much for listening again. Look forward to catching up soon. And all the best, everyone. Bye for now.
Cheers. Thank you, Matt. The great Matt Dixon with the Market Watch Report, world-class analysis that we have on the Impact Money Show daily. Serving it up, talking about it all, folks. We cover it all. And if we're not covering something that you want us to cover, just let me know. Crypto, stocks, oil, currencies, precious metals. I mean, we do it all. I'll tell you what, and the more data sets that you have, the better decisions that you can make. I'll tell you this, after doing the show with Matt for well on about a year and a half now, I am not the trader that I used to be. I am a completely different trader. And I'm pretty deadly, if I say so myself. I have an interview queued up here with my friend Roger Chai. Robert Shi, I think is probably how you pronounce it. He's a great guy. He works with people to move their assets and move their money into safe haven type places where you can protect it, not pay so much taxes.
And we are live here at the Global Family Office
for a second. Now, I got to fix this somehow. I don't know how I'm going to do it, but to George Ferraro, founder of KPI Capital, it says at the top, you have to just ignore that. This is Roger Shi. I'm going to put his name on here and make this big. But what he's doing, guys, is really important. As you make money, you want to keep it. You know, the wealthy, the elites, the wealthy, they don't pay all the taxes that you pay, and you shouldn't pay them either. That's one of the ways that you get lucky. I'm not saying that you shouldn't pay taxes. I'm saying that you should use the different things that are available to you, and you don't have to be super wealthy. Okay, you don't have to be super wealthy to take advantage of it. Okay, you know that's how you get wealthy. Okay, but this is Roger Shi
at the beautiful Mandalay Bay. No, I'm kidding. Mandarin Oriental is a really nice place here in downtown Dubai. I have with me here an old friend, Roger Shi. He does some interesting work helping people to keep their assets safe. Roger, tell me a little bit about what brought you here to the Global Family Office Investment Summit.
Fantastic. It's great to be here. Great to be part of the audience. Welcome, everybody. So my name is Roger. I work for a company called 1291, and what we do is we work with high net worth companies globally in one of two things. We either help them legally optimize their taxes, so from the US or UK or Western Europe, high quality life but high taxes. How do you help you optimize those things? If you're from the developing world, from China, Southeast Asia, the Middle East, it's all about privacy. It's all asset protection. The more wealthy you become, the more private you want to become. So that's in a sense what we do.
Amazing. So Roger, you've been doing this for quite a while.
Right.
I think years we talked to each
Yes,
other.
Exactly. You know, we've been over what, 5 years or so?
At least.
Or in and out,
yeah.
Conversations, right?
We finally meet face to face, right? First time.
Exactly.
Yeah.
Exactly.
Yeah. So what Roger does, and I'll let him talk about it a little bit more, but he uses legal ways that you can protect your wealth from losing it, from the government taking it. Even like when you pass away, you want to leave your house to your kids. You don't want it to be taxed again. You already paid taxes your whole life on the money you made. You paid taxes your whole life owning the house, or else they take it. It's like one of the worst ones to pay, honestly. And then there's legal ways that you can protect yourself. So talk a little bit about the mechanics of how this all works.
Yeah, so there's some there's some interesting legal structures, especially if you're Americans, where you can legally lower your taxes. You can basically lower your capital gains taxes and your state taxes on all your investments, whether that be your stocks, your crypto, some of the investments you make in the hot AI company. You can legally optimize those taxes and really tax defer those taxes down to zero almost forever. So these are widely used structures. The structure that we use for the US persons, for example, it's a 50-year-old US structure. It's been around for a long time. It's been tried and true. It's tested. It works very well. There's legal opinions from the top law firms, from Baker McKinsey to Withers. All the top law firms can endorse that these things are a bona fide solution and they do work. And we have a lot of clients globally on it, not just the US, but globally on these structures.
So it's interesting. One of the conversations that I had here yesterday was with a gentleman. I might even have him on the show one day coming up soon. But he's working for a family office, and they invested in like one of the really hot markets 200 years ago. Okay, and about 30 years ago, they decided to diversify, and they go and that's where he's coming in and he's working the different things. But you want to think like that, because those people know they're not getting taxed every time they turn around. And, you know, you hear about, oh, Trump doesn't pay taxes or Elon Musk doesn't pay taxes, but you're paying taxes. And they're printing up the money anyway. Why are they taxing us again if they're just printing in the money? And so you should really, in my not so humble opinion, take advantage of these types of vehicles.
Yep.
I mean, if you could expand on that.
Sure, yeah, exactly. So look, I think you've worked very hard to earn your money. Growing your money is the most difficult part of everything, right? So you worked very hard, you've grown your money. Now you've grown your money, how do you protect it? And that's really what we do. We do the legal structures around it. Historically, if you're a rich family, what you would have done is you'd have taken all your assets, you would have hid it in a BVI, a Cayman, a trust, a Singapore company, a Dubai company, and you use secrecy for asset protection. Obviously, that stopped working about 15, 20 years ago, right? For FACTS for us Americans, CRS for the rest of the world, CFC rules, the Pandora Papers, the Paradise Papers, all these different things, right? So it's a transparent world. So let's use some actual legal structures to hold these different assets so that you can legally pay less tax, so that you can legally have more privacy. In America, I think our favorite thing to do is using something called private placement life insurance, PPLI for short. It's a derivation of two words. The word is life insurance, because the underlying vehicle is a life insurance vehicle. Private placement, because the investments are private placement. With these types of vehicles, what it does is it gives you almost a tax shield of sorts. And that's because if you think about it, life insurance at its very core is for widows and orphans. Widows and orphans need to be protected. Governments also don't want widows and orphans to come back to the government books and says, hey, look, my husband, my wife, the main breadwinner died, please give me a handout. So they encourage us to save for our own families. One of the ways they encourage us to save for our own families is that they encourage us to buy life insurance. One of the key ways they encourage us to buy life insurance is that they give life insurance companies a lot of tax breaks.
Yep.
So, and all we're doing is we're taking those tax breaks that life insurance companies get, that they're giving to widows and orphans, and we're just giving to high net worth families. That's all we're sort of doing. We're using these actual legal constructs. This structure's been around for 50 years. It works very well. But once you're in the structure, basically, you can trade between the assets and be legally tax deferred. So, and that tax deferral can go on forever. And that's sort of what we do. We're just taking advantage of these different structures and giving these plans to high net worth families.
Well, it really is. It's an important thing to do. Do it for your kids.
Yep.
I'm a big proponent of it. I mean, obviously, one of the reasons why I got into Bitcoin in the first place was to take the power and the control back from the central bankers and the government and everything else. I mean, that was what this whole thing is all about. Turned it into a career. Here I am in Dubai, and we just got off stage. We had a great panel.
Yeah, amazing.
And now doing interviews and everything else. Thanks so much for coming on. What's the website? How do people find you if they want to talk to you?
Yeah, so very simply, I think you get in touch with Bruce. I think he knows where to find me. Also, you can go to 1291group.com. Just so you guys know, 1291, the numbers, it's the founding of Switzerland. It's like 1776 for us Americans. It's a Swiss company. We have 13 offices around the world: Zurich, Geneva, Liechtenstein, London, Panama, Bogota, Sao Paulo, Mexico City, Dubai, Hong Kong, and then Singapore. So we're around globally. We work with all the big private banks, whether from Goldman Sachs, Julius Baer, Lombardier, VP Bank, Pictet. We're wholesale to them. So rather than paying them a markup, we can just pass a wholesale cost to you and your clients. And we'd love to have a chat. And there we go. That's a little bit what we do.
Roger.
Thanks for the time.
Thanks
I really
for coming
appreciate
on,
it.
man.
Yeah.
See you soon.
Yeah.
Hey Randy, I got another home run for us, man. This 2-bit exchange is absolutely amazing.
Hey Bruce, what's up, man? Yeah, why don't you tell me about that 2-bit exchange?
Yeah, that's right. And we're going to be able to list our coins that we want, that we support, and they're going to be on this amazing derivatives platform. It's absolutely awesome.
Derivatives? I love derivatives. I can't wait to be on the trade copy program.
So what I want you to do is set up an account and then send me your UID, and let's set you up with a trade copy system, and you just let it run. Copy our trades. That's it. Easy peasy.
So you want me to open an account, send you my user ID, and you hook me up with the trade copy system. I can't wait. Sounds spectacular.
Hey, Matt. Hey, listen, I met with the guys at 2-Bit Exchange while I was in Dubai, and this platform really looks amazing.
Yeah, hi Bruce. Yeah, thank you again for that heads up. I mean, I've looked into this 2-bit platform. It does appear to have everything we're looking for.
Yeah, that's right. 2-Bit, TOOBIT. They have great liquidity. They have futures platform. There's a lot of functionality that I think you're going to like on there. And they really want to work with us. They want to work with the Impact Money Show. And as you and I both know, if they have a good product and they want to work with us, well, hey, that's half the battle.
mean, basically, I love that copy trade facility. I love the features on the platform. It's basically very simple to use.
Our viewers only need to set it up to copy our trades, and they just do all the trades that we do. Makes it really easy for people to participate. I think they're going to love it. I'm pretty excited about it.
And yeah, it's definitely going to benefit people. I mean, obviously with all the years of experience that we can pack into it and people can basically benefit from that. Yeah, I definitely think it's a goer.
Hey, David. Yeah, man, I'm excited about it too. I mean, when you think of the ways that we can help our viewers earn money and be able to participate in the monetary revolution, this 2-bit platform just opens up all kinds of doors that they don't have right now.
Hey, Bruce, I'm checking out this platform. It's revolutionary.
That's absolutely correct. And the futures platform is amazing. Great liquidity. And the copy trader program, people are going to be able to make the trades exactly when we make them and make the money that we make. It's a win-win for everybody.
Open for U.S. customers, and you can deposit money with a credit or debit card. Doesn't get better than this.
Beautiful. And what do you think we should use as a referral code?
I think we should use Impact Money. That's the one. Impact Money.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.